And the types of tests and what to do with them. Okay, the test is a common sign of strength frequently seen just before an up move. You must have strength in the background. That's underlined. I repeat, you must have strength behind you to have a successful test. A test is doing exactly what it says. It is testing something. It is testing for supply. Too much supply and the market will fall. If there's no more supply, the market must go up. If there's still too much supply, a test can fail. And if you see a failed test in a weak market, it confirms that the market will continue to fall and is a serious sign of weakness. Tests need 2 bars to confirm. All right, now you see a test. I know some of you are out there seeing low volume down bars and entering, thinking, there it is, and the next bar's down, and you think, I just got stopped out. Tom Williams told me that was a sign of strength. Well, now we're telling you clearly, you do not buy the test bar, you actually wait for the reaction and put your order above it, if you're going to go long.
Well, very, very rarely do you fail on a test if you've got strength behind you.
Yeah, I've seen that.
But where you people fail, there's some horrific signs of weakness right hanging over you, and the market very often seems to look like a test, but it's not a test. Don't ask me what it is, but it's not a test.
It just people look at bars in isolation without looking at the background.
You must do that.
And I think today we've already said the word background. How many times will it background? Is it important?
Absolutely.
How important is it to your trading?
It's 100%.
Vital.
Yes.
And I think it should be to everyone who listens to this course, is live here. Look at the background. It will help you. It's an unfolding picture. Now, Tom, if you see a sign of weakness, like an end of a rising market, and it goes down up on no demand, then you see a test there. And it's testing something, that big high volume on the up bar, and the next bar's down. It's a failed test. And that's a very serious sign of weakness, isn't it?
It is. If you get a failed test, that's normally a sign of weakness if you've already got weakness in the background.
Such as end of a rising market. Yeah, we've talked about
anything high volume and up bars.
Yeah.
Especially if they're narrow spreads, especially if they've got signals on them, that's weakness.
Yeah, and I've said here, if you have weakness in the background, and you see a test and the next bar is down, this is a strong sign of additional weakness and it's called a failed test, rightfully. This is what everybody's been waiting for, the test. Now, the test is most powerful in an uptrend.
Great.
However, we have different types of tests, and in fact we have signals in Trade Guide that say no supply, test in a rising market, and test.
And basic test.
And a basic test.
Yes.
That's 4 tests. Could you have a test on an up bar?
Yes, you can.
And the reason it's on an up bar, now again in Tom's book it's usually on a down bar and
Usually,
it's stronger,
yes.
but you can get a test on an up bar.
You can do, and the best, if you have a test on an up bar, I would say you're best to see that in an uptrend.
Yep.
Because what it's usually telling you is that if you go down one time frame, you will see a test on a down bar, but the market's so strong that it's actually closed up.
Yeah, so that's important because we deal in different time frames, don't we, at Trade Guide?
But the important thing you must remember if you see that is that it must be probing down and then close up sort of towards the middle or high.
So here we have the test. This is Goldman Sachs on the daily chart. Now, what makes this very, very interesting is the trend channel that I've drawn in here, which if you can draw this for yourself, by the way. If you go back to early January, just pick the first 2 lows and the intersecting high, and it will project out the channel. But what happened was, we came down here to the bottom of the trend channel, and the volume was very, very low. But what made it interesting was the range or spread. Very, very narrow spread bar, like this. And then it was right on the bottom of my trend channel, which had been in place for a while, and the next bar jumped up. Now that, Philip, when you see that sort of reaction to the test, it's very bullish, isn't it?
It is, yes, that's shown real strength.
Yeah, and at that point, what would you do? Because there you see, you didn't get another test really into that price level. It just took off. And in fact, Goldman went up there to about $200.
Yes, I can't see any more. I can see what looks like a test, but the volume's far too high further along.
Yeah, well, there was this here was the one actually that I was talking. See this one here?
Oh yes, I hadn't quite got to that one. Yes.
Yeah, that was actually my entry on that chart as it happens. But because that again, it came right down. There was some news, but there was no volume. There was no selling pressure at all on the bar. And I put a buy order in above it, thinking, well, let's see what happens. And sure enough, pushed in. And then, well, we're going to talk about I'm not going to spoil the surprise. I've got to show you something on this chart which nearly freaked me out of my trade, actually, as it happens. But when I found out what had happened, in fact, you can see it here, look, this bar here. We're going to talk about that later. Okay, this bar here. So we won't talk about it now. We'll come back to that. Now here is the E-mini S&P 8-minute chart, and this again shows some nice principles. Do you buy as soon as it gaps up after the no supply? Also, well, I'm putting my buy order in above, just above. In fact, I didn't take that gap down, the gap down test. I put the order in just above it, Morris, and that's how it pushed through. But this is a good example. Look, now this is probably one of the best ones I've seen on the E-mini, and you get these every day. But at the time you're trading them, you're in a whipsawing market here. Okay, whipsawing around, and what brought this to life was this bar here. Look. Okay, now you've got strength in the immediate background. Okay, the price hardly closes below it. You see I've got support. If I drew a line here, it hardly goes down it. Look, we get more buying here. So we've got one strong bar and two strong bars and three strong bars right here. Philip, you agree?
Absolutely,
yes.
yes.
Three very strong signs of strength. Okay, now the 8-minute chart, there's no reason, Chris, other than because I traded it on a 5, but this, the example I wanted to show you here is when a market's whipsawing around, we've got to look at the volume as the clue. Now I want you to look at the bar that I've got arrowed. Now look at the volume on that bar compared to all the previous bars. Okay, it's incredibly low. It's a very narrow spread on the bar compared to all the other bars behind it, and it closes off in the middle there, but it's into the body of the bar behind it. That's what makes this one key. It stays, the high and the low of the bar almost are crushed into this body of the bar behind it. It closes nicely in the middle, but that's what got my attention there. Now the other thing that had happened, we'd already made two higher lows, just here and here, and then we get a test. Okay, this bar here was my entry bar with my buy order just above. Okay, and I put my stop below the bar behind it, which was just there. Now the reason I picked this particular chart was because from that test it churned a bit, and then finally we got the breakout trade. Okay, but you could have taken the trade here as well, because you've approached resistance and the spread of that, it's almost the same bar, the volume is still very low and it looks very similar to there, but I was fortunate to get in earlier. But both of these, this chart gave me two buses. Two of Tom's buses arrived right there. Okay, and you know that's, and again you did the one you said at 10 o'clock, I think you're talking about that one there. Okay, this one here, it wasn't in the body of the bar. This close, this was higher. Look at the difference between that bar and that bar. This one is in the body of the bar behind it. Okay, and that's very, very important. Okay, this one not quite, not as obvious. That's why that was my entry. It was, and the volume here is much, much lower than here, much, much lower. That's what brings it to life. That's why low volume down bars with strength here are very high probability to the upside. Would you have taken that trade, Philip, had you seen that?
I'd have grabbed that one with both hands.
Yeah,
if I'd been watching that, yes.
It's very strong
Definitely.
sign of strength, very strong. Okay, now you'll see, you're going to get this PowerPoint tomorrow, so once we've uploaded it, we'll show you where you can download the PowerPoint. Go and study that one, because that is a setup, okay? And it's, if you look at this, it happens very quickly. Widespread down, there's the ultra high volume, next bar closes level. Now I know there's got to be some buying in there. Now I know they're going to mark it back down for some more. They do here and here, okay? And then they finally come back down into the body of this bar, that's the key, and into the body of the bar behind it, narrow spread, close in the middle, low volume, absolutely nothing there, next bar up, pushed into the trade. Show you another example. Again, this one, Philip and I, well, this is, Philip, you can discuss this one, because this is one of those examples where that's a 3-bar setup that I would take. I wouldn't even wait for another test, and I know you did. So do you want to talk about that one?
Well, that one actually, I talked, if anybody was listening to the seminar I did a couple of weeks ago, I think it was last Thursday week, I actually gave this example.
Yeah, it's in the VSA club.
Yes.
Yeah.
Yeah.
You want to
I
talk
mean,
about
that
it?
is probably one of the most excellent examples you can get. We had a long falling period behind us in Barclays. This is Barclays UK stock.
It's a banking sector stock, yeah?
It is, yes. We all know what the news was like in the banking sector.
Yeah.
When it reached that bottom, Everybody was assuming the banking sector was going to go bust, everything was going to go wrong. And yet, somebody stepped in and bought there. And we were really talking about a lot of buying. If you look at that volume, it's massive compared to all the other bars. It's closed right up near the highs. It's into new, fresh, low ground.
Almost like end of a rising market, but the opposite.
Almost is. It's almost back holding, except it's not gap down. And if you notice, a couple of bars before that, the previous 2 bars, there was probably some buying in there as well. But there was a bit too much supply for it to...
Yeah, let me just ask, Alan just says, so to be within the body of the previous bar, the test cannot go above the close of the previous bar. That would be the perfect test. Like here, you see this bar here? Okay, there's your stopping volume. This particular one, it's a variation on a theme, Alan. Remember, tests come at you in different disguises. You're going to get what we call the perfect setup, and then there's sometimes when you've got to use your thought process as a human, say, well, does that look like a test? Yeah. But here, tests come in different varieties. This one here is an immediate test of this massive buying, and it just takes off. Barclays went up a long way, didn't it? About 150 to 200%.
Oh, it did. I think it went up something like 380, something like that. So.
Yeah. Let's look at another example here. Now this again, you can see what happened here. After the test, we then start to take off, and you can see multiple tests all the way up. Okay, especially at bar, well, the best one I saw there was bar E, because it hasn't exceeded the close of the previous bar. It's a beautiful narrow spread, but look at the volume. There's nothing there. Professional money are not interested in the down price here. They're not interested in the downside. And you've got your stopping volume, which is down here, which was tested. It churns. There's your the widespread down bar, which I've marked the top of. It acted as resistance once, twice, 3 times, and finally they push it through on a bit of supply, absorption volume, test it, up we go. So there's a good example of absorption volume, where high volume on an up bar through that old area with strength in the background here is genuine absorption because they're bullish.
Yes.
Anything to add to that?
Nothing I can really add to that one.
Okay.
No.
Tom, anything you want to add there? You've got stopping volume.
No,
it churns a little bit. It hits resistance twice, and then it goes up on
That's
very high
Barclays
volume.
Bank, is it?
Immediate test, and then takes off. Yeah, very, very obvious one, that one. Okay. This area here, Robert, on B again, a gap up bar, and then it runs away. Well, here on B, what we've got here, this bar here is a high volume bar at A. B doesn't actually gap up on this example. It's a level bar. The volume is low. Okay, so it's declining volume and it's level. That means as they push the price down, there's no selling pressure on the bar. That's what B is. No selling pressure. We know that because the next bar closes up. Okay, then they bring it back up, but C is a markdown on very low volume. The next bar is level, and in all of that area, if you counted strong bars after this weak bar, which you could initially, you'd think this is a false breakout. But it's not a false breakout, and it's not a weak bar now, because they've absorbed all the supply, because that's there. That has not disappeared. The buyers down here on the stopping volume, on that high volume, are still holding on to that stock. They want to get it up. They want to get the price up to sell it higher to the herd. So this here brings this to life because of that. That's what you've got to get from this seminar. You've got to look behind you. So when you see a test like that, okay, you must have strength in the background, as we've seen. Sometimes it can be 20 bars or even 30 bars back. Correct, Philip?
Yes.
Now, how far back would you go on a chart sometimes when you see strength? I mean, it depends, I suppose, on the volume. If it's ultra high, then it's going to have a bigger effect.
Yeah, it depends, because different stocks will take different lengths of time to accumulate.
Right.
Because when they start the accumulation, they're obviously removing the floating supply from the market.
Yep.
To do that, sometimes can just take, as we saw with Barclays there, it took probably, about 30, 40 bars, something like that. Sometimes it can take, as Tom will tell you, take a couple of years even to accumulate. Tom told us the example, I think it took, was it 7 years once to accumulate.
Yeah.
So it depends on the amount of floating supply and how easily it is for them to accumulate it.
Yeah, now, Morris, you were looking here at bar C, okay, and that would be a perfectly good entry. There's nothing wrong with that. I'm not suggesting that. I mean, bar B would have been good, bar C would have been good, bar D, not as obvious, bar E definitely. Any of those 3 entries would have been good to the long side. And the reason they were, you had strength here, just to repeat it, you'd taken out this old resistance here, which was actually caused by this widespread down on this supply here. it caused a bit of resistance, it broke through, the volume was high, but then it refused to come down on low volume. In fact, I would say C is a good entry. I'm not disagreeing with you, Morris. I think it's a very good entry. And in fact, I didn't trade that stock, but certainly that would have been something I would have looked at. So let me just recap. You must have strength in the background, such as stopping volume or climactic action. Place a stop under the low of the climactic bar and place a buy order above the test that you've chosen to enter on. Remember, a test can fail and you can retest an area several times before the market moves up. So placing an order above the test lets the market come to you, as we've discussed. If the test fails, then you're not in the position anyway because you haven't bought a market.